So there are two types of entries. There's a risk entry and confirmation entry. Okay. So the risk entry, what we're saying is that we'll have an order block that we want to trade, right? We'll have an order block that we want to trade. We just put either a buy limit or sell limit and the stop loss, and that's it. Right. We won't do any further confirmation whatsoever. Then we've got a confirmation entry. For a confirmation entry, we actually wait for price to come to the order block. And then when it comes to the order block, we look for a specific pattern, right? Or a shift in market structure. Then we draw another order block and do a risk entry there. So those are the two types of entries that we have, right? So earlier today I asked you to prepare flashcards, and I then realized that we didn't actually properly cover all the application part of the strategy, right? Okay, so we're going to have a backtesting session right now. Let me just pick any pair that I haven't really been looking at. USDCAD. Okay, USDCAD. Okay, so the first thing that we want to see when we're looking for a trade is a shift in market structure, right? After we get a shift in market structure, now we're now looking for trades in the direction of the identified trend, right? So how do we find a shift in market structure? It's what we discussed when we were looking at market structure. So we want to see what we want to see is, say this is an uptrend. For instance, say this was an uptrend, right? We just want to see a break of structure, right, of the previous swing, right? And then we want to see a failure, right? So this one, it failed to reach to the top here, right? We see a failure and then another break of structure, right? So we have a shift in markets, structure. And so now we're looking for bearish order blocks, right? So in the instance, we'll probably draw one here, draw one there, draw one here, draw one here. Okay. So look at this order block, right? It was respected. And remember the 4 things that we look for in a strong order block. Number 1, we want to see a break in market structure, right? So in this case, we already had this structure being broken. Fair enough. That's number 1. Number 2, we want to see a strong move following that order block, right? So here we already have like a strong candle there, right? That's two. Number three, we want to see a liquidity run, right? So there was sort of like a liquidity run here. Well, yeah, but remember we said we want at least three of the things, right? And then what is the fourth one? An engulfing candle, right? So here, of course, we've got an engulfing candle. So this is a strong order block, and it was respected there. And let's say you put, let's see the risk to reward ratio for this kind of trade. Also note, you find that you can see that some of these order blocks, right, some of them are not strong. Some of them intuitively, if you backtest enough, you know, yeah, this one is not likely to be respected or whatnot. But you can see that many of them were not even respected. So sometimes you have your order blocks and you draw them, you put your limits, but price won't even reach there. It's still fine. You just have to have the patience for the trade to come your way at some point. Right. Okay, so if we put our target there, this is simply 1:10 kind of trade. So that means if you get this trade, you'll have to lose 10 times for you to be in a loss, right? So let's continue. So we have, can we say this is a shift in market structure? Okay, break of structure, right? And then, okay, here there was a break of structure, but it was via a wick, right? We said that we prefer the break of structure to be a body candle, but it's a personal thing. If you do wicks, it's still fine. But I think it's always best to say the break of structure should be a body, like actually breaking structure. Okay, so if you consider this to be a shift in market structure, you would draw your order blocks. Say something like this. I mean, and the stock will be below there. You won't really lose, but you know. Anyway, moving on. We now have this low. Okay, we have a breaking structure, right? Are you following? Are we still together?
Yes, I'm following.
Okay, we have a breaking structure, right? And then it made this new low, then it was broken again here. So we've got a shift in market structure. We're now looking for order blocks in the bearish direction, right? And we have one here, which is quite big, if you ask me. But if you have big items like this, what you can do is, say if you, of course, we really want to get that good risk-to-reward ratio, but we also don't want to be greedy. But what you can do is you draw your fib and trade the 50%. I'm not sure if you've come across this, the 50% guideline. I'm not sure if you have. So in this case, we draw 50%.
Yeah.
You have.
Yeah, Brighton. Yeah, Brighton taught me last time.
Okay, that's nice. So 50%, and then you know, if you could put your target here. If you do the Elliott Wave like me, you know to actually hold for longer, but it doesn't matter. You can still see that the risk-to-reward ratio is good. And so far we have won 2 trades in a row Is that correct? Yes. And we haven't lost. Maybe if you made some mistakes, you'd have lost 1 or 2 there, but you can still was still in profit, right? So it's a powerful strategy. Okay. If you to just make sure you put the practice in. So when I wanted flashcards, I just wanted you to kind of you show the breakout structure, and then label this is the shift in market structure. We're now looking for order blocks in this direction of the trend. Then you draw your order blocks, something like that. Okay. So now what we've been doing here is the risk entry. We're just drawing order blocks and not yet, so we're not confirming. So there's something called a confirmation entry. A confirmation entry is something like this. Say we have an order block, right? And this is price, right? So we wait for price to enter this zone, the order block zone, right? And then when it's there,
Yes.
we actually put an alert. You know, you can put an alert. The many apps that allows you to put alerts to say, look, price is now in that zone. So when it gets into this zone now, right, we now want to confirm, right? So how do we do that? There are many ways to do it, okay? Number one, we wait for another shift in market structure, right? In the lower time frame, you actually go to a lower time frame. Some people would go even as low as 1 minute, right? After maybe finding the order block, why not? Right? You look for a shift in market structure in that zone, and then when you get the shift in market structure, you draw another order block and then trade that OB. So if you do this, your risk reward ratio will be insane, because sometimes you have a stop loss of maybe even 3 pips or 5 pips, really small stop loss, because you're really in the gist of it. Because these order block things can work even in the lowest time frames, like 1 minute or whatnot. But sometimes you won't get triggered. You'll find the shift in market structure, but your trade won't get triggered and you would have missed it. It's still fine. Right? So that's one way. Right? Another way is doing a wave count. This is based on Elliott Wave principle that I teach. So you just confirm with your wave count and say, okay, according to my trading theory, this is valid, and then you take it. Sometimes you're wrong, sometimes you're right. But doing this confirmation thing, I think it boosts your win rate, but it kind of it's a lot of energy, it's a lot of work. I mean, waiting for alert, then you open your chart, then you actually wait for something to happen, all that kind of thing. Putting a limit order is much easier. But if you've got the time, right, this is the way to go. Then the third way is to wait for a Wyckoff pattern. Right. So Wyckoff is a trading system on its own, but you actually don't have to learn it entirely. Just look for one of these patterns. Let me draw them for you. You can look for one of these patterns. something like this, right? You can look for that one, or you can look for something like this. Right? Or you can look for something like this. Right? So you can look for either of these, any of these three patterns. Right? It's super simple. And you would want your trade to be, so can you see each of them have got 4 points, right? So this is, you won't find this information anywhere else. This is actually something we invented. Okay, we didn't invent, we just discovered these 4-point kind of patterns that you will see, right? And then you would want to enter your trade somewhere at the end of the 4th point. Now, the problem with this one is that sometimes it's good, like sometimes it will work perfectly for you, but sometimes you could still be wrong. But what I want to highlight actually is sometimes price will make that leg, right? And then say the order block is there. It will do a long leg, right? And then count down and do that. And so if you enter here and your stop loss is there that high, right? Your risk reward ratio might get messed up. Say if you're supposed to get a higher risk reward ratio, if you did the risk entry, now you're going to get a lower one because this long, it'll be a wick most of the time. It'll really mess up your risk reward ratio. But yeah, but otherwise, I think it's and sometimes you actually see the pattern and still be wrong. Like, it happens, right? We are not 100% accurate. And if you're 100% accurate, there is something wrong. You're probably doing something wrong. I mean, if you think that your strategy is 100%, then you're not being honest with yourself, right? But we still trade because we believe that we'll win more money than we'll lose in the market. So I think that's about it for entries, and also for our small back testing session, so that I hope you got the gist of what I expected for the back testing thing. Do you have any comments, anything you want to ask? Samuel?
No questions, sir.
No questions. So we can
Yes, sir.
You've got no questions.
I got no questions.
Okay, so we can end the session.
Sure, sir.
All right, Sharp, thank you for attending.